Hey everybody, this is Justin Munt with Munt and Associates. I'm here with James Leary again. He's spent over 24 years in the financial services industry helping clients protect their income and protect their family from unforeseen things that can happen, such as disability and death. And today we're going to be looking at the value of life insurance. If a premature death happens in your family, we're going to be trying to put that into perspective for clients, because I think a lot of clients, they don't have the amount of life insurance that they need. They think they have some at work, they have some, and they think it's enough. We're going to try and illustrate how much life insurance families really should have. So James, please take it away.
Hey, thanks a lot, Justin, for having me on another one of your videos here. I love doing this with you. By experience, I am a disability insurance, expert. I've spent most of my years in that area. But like Justin said, today we're going to adapt that to a premature death or a life insurance conversation here. And the easiest way to do that is to go over an example of visually, so we can kind of walk through some of those elements here. But it all starts right here with the value of what your income is. Now, again, we're just illustrating a 40-year-old here earning $150,000 a year. And then we're illustrating an income growth on that from now through age 67 using a 3% annual income increase. That could be different for you, but just to give some general sense around how valuable your income is, it is by far your most valuable asset that you have at your fingertips, especially your ability to grow and continue to earn that income over the course of your career, and what that income does for you and your family to meet retirement goals and dreams and buy things and pay for your home and all that stuff. It is just your most valuable asset by far. And one of the things that can disrupt that is a premature death. So as an example, even though statistically speaking, the chances of you having a premature death during your working years are quite low, but it's not really about the statistics here. It's about the consequences should something happen and you not be adequately protected for that in your family moving forward. So our 40-year-old, everything's going well here, but what if hypothetically they had a premature death tomorrow and they couldn't work again? What's that financial impact there? Well, some easy math here. If they died tomorrow, they were going to make $6.4 million. Well, now they're going to lose $6.4 million. But what's the chances of that happening? Probably pretty darn low, right? But what if something happened at age 50? They had a premature death there. See, their life insurance need here still about $4.7 million. And we're just talking about during the working years here. We're not getting into post-retirement or anything like that. We're just talking about some basic fundamental, needs here. But 4.7 million. But what if it was maybe not at age 50? It was maybe age 56. That's about a $3.4 million income loss. Yeah, that's not going to happen at age 56. What if it happened at age 60? Well, even 60. God forbid you had a premature death out there and you were similar to this hypothetical case study here, that'd still be a $2.4 million loss of income during your working years here. So, the point we're trying to get across here, we see so many clients out there and folks that have no life insurance at all, or they have some life insurance. Maybe it's through their employer. Maybe they individually own a policy, like a term policy or something like that. And it might be $250,000 of coverage, or $500,000 of coverage, or even $1 million of coverage, which is great. But more times than not, even that $500,000 or $1 million of life insurance coverage is far, far lower than what you actually really truly need. If you had an experience like this sometime later on into the future, to make sure your family is really adequately protected here. As we go through some of these scenarios here, if this person, it's great if they have a current plan in place that covers, a death benefit of $250,000 or $500,000 of coverage. But holy smokes, really, regardless of the situation here, they're heavily undershired in case something like that were to happen to their family. So I just recommend you taking a look at your life insurance needs with Justin. He's an expert in that area, and he can help analyze this for you on a little bit more deeper level that is specific and personal to your situation.
Thanks, James. Guys, contact us. We'd be happy to take a look at your needs for life insurance. You may already have coverage. You may have coverage through work. Let's take a look at what you have, and if it would do a good job of replacing your most valuable asset, which is your income. James, thanks so much for joining us today, and we appreciate your input.
Thank you very much, Justin. Appreciate it.